Hello, welcome all to the online class. Today's topic is Introduction to Financial Management. As you know, finance is the lifeblood of any business. We require fund for the smooth functioning of business and also for its long-term survival. However, finance, like any other resources, are always limited. On the other hand, wants are unlimited. Therefore, it is important for a business to manage its finance more efficiently. So, what do you mean by financial management? We can divide this term into two. One is finance and another one is management. So the term finance comes from the Latin word finis, which means fund. Whereas management is the planning, organizing, directing and controlling of any activities in the business. So the term financial management, together known as planning, organizing, directing, controlling financial activities such as procurement and utilization of the enterprise. So procurement means acquiring the fund from different sources, and ultimately these limited funds are utilized and allocated in different productive channels. So basically financial management means applying general principles to financial resources of the enterprise. Next is definition for financial management. First one is financial management is the activity concerned with planning, raising, controlling and administrating of fund used in the business. Means there is an application of management principles in the financial activity of an enterprise. Next is financial management is that area of business management devoted to a judicious use of capital and a careful selection of sources of capital in order to enable a spending unit to move in the direction of reaching the goals. It is the area of business where the scarce resources are carefully used and allocated in order to earn maximum return. Next is financial management is the operational activity of the business that is responsible for maintaining and effectively utilizing the funds necessary for efficient operation. It is the operational activity which helps in optimum utilization of funds. Next is need for financial management. The financial management is generally concerned with procurement and allocation and control of financial resources of the concern. The objectives can be: first one is to ensure regular and adequate supply of funds to the concern. If the supply of fund is blocked, it will affect the overall operation in the business. We require both short-term and long-term funds for the smooth functioning of the business. Next is to ensure adequate return to the shareholders, which will depend upon earning capacity, market price of the share, expectations of the shareholders. If the funds are allocated in the most productive channel, it will help to earn more return to the shareholders. Next is to ensure optimum utilization of funds. Once the funds are procured, they should be utilized in maximum possible way at least cost. So our scarce resources, financial resources, should be utilized effectively without any wastage. Next is to ensure safety on investment. That is, fund should be invested in safe ventures so that adequate rate of return can be achieved. A careful analysis is to be made before investing or allocating funds in a particular channel or investment option. Next is to plan a sound financial capital structure. There should be sound and fair composition of capital so that a balance is maintained between debt and equity capital. It helps in creating a balance between debt and equity needed in the capital structure of an enterprise. Next is the main objectives or goals of financial management. The first objective is to maintain liquidity of the firm. If the liquidity is maintained, it will help the firm to meet its financial obligation without any delay and difficulty. Next objective is maximization of profit. It is the main objective of any business enterprise. It helps in safeguarding the economic interest of the person who are directly and indirectly connected with the company, such as shareholders, creditors, investors, employees, etc. Next is wealth maximization. Maximization of owner's wealth is possible when the capital invested initially increases over a period of time. Wealth maximization means maximizing the market value of investment in shares of the company. So, wealth of the share equal to number of shares held into market price per share is known as maximization of wealth or the calculation of wealth of the shareholders. Next is, why is financial management is so important? It helps organization in financial planning, assets organization in planning and acquisition of fund. Next is, helps organization in effectively utilizing and allocating the fund received and acquired, assist organization in making crucial financial decisions, helps in improving the profitability of the organization, increases the overall value of the firm or the organization, provides economic stability, encourages employees to save money, which helps them in personal financial planning. Next is financial decision. We have got three financial decision. First one is investment decision, financial decision, dividend decision. Investment decision. It relates to the selection of asset in which the firm invests. It can be both long term as well as short term. Long term means it is for the longer period and is also known as capital budgeting. Then short term means it is for the short period and is also known as working capital management. Next is financial decision. It means managing the procurement of funds from various sources, its types, period of financing, cost of financing, and the return. Next is dividend decision. It deals with the decision of distributing the profit earned in the business among the shareholders. It has got two choices. One is to distribute that profit among the shareholders, and other one is to retain that profit in the business. These are the three main business financial decision in financial management. Thank you.